So welcome back to the last part 4, where I'm going to go through a series of contracts and just give a little bit of my analysis, my take on what's going on within the markets. So this is the technical analysis section. And you know, just a reminder, so you know, we've got a lot of inflation data leading up to the FOMC meeting decision this coming week, so you know, expect some big moves, I would say. And of course, you know, it's going to be a question of whether they're going to skip or they're going to do 25 basis points for the Fed, and of course CPI could swing it one way or the other. And then of course you've got ECB, which is pretty much a done deal for a 25 basis point increase. Now, the indices analysis, just going to warn you here, I've moved on now to the September futures contract as June expires this Friday as part of the quad witching. So just a reminder of the legend. So black numbers in the right hand column, they are going to be support and resistance levels based on trend lines. Brown numbers are breakout levels. Claret numbers, these horizontal lines that I put in, are either levels where I see support or resistance, or whether they're on double, triple tops or bottoms. Just a reminder of the pivot point colors and also the fib colors, and there is at least one chart with the fibs this week. And here it is. So, you know, on this one, I've added 2 sets of fibs. So on the first set, the longest ones, the longest sort of horizontal lines there, I've taken it from the low to the high. And then I've added a second set of fibs where I've taken it further to the right from beginning of May to the middle of, towards the end of May, where we had that sell-off. So I've added those on as well. So you've got 2 sets all in one on there. The short lines are the more current ones based on the sell-off and the move back up. The longer ones are based on the early move from March's sell-off to the recovery at the beginning of May. Now, also, I've managed to get a couple of trend lines on there. So I see on the daily resistance at 34,003 and support at 33,725. On the 30-minute, we've got that uptrend at the moment, and I've got resistance at 34,245 and 34,213, and support is at 34,147. Moving on to the S&P daily, I've got resistance at 43.26 and 43.25. That's just those two trend lines there, just almost merging at the same price. I've got support at 42.67 and 41.14. On the 30-minute, I've got resistance at 43.52 and support at 43.42 and 43.33. And of course, you know, the S&P did return back into its bull trend. You know, that's a 20% move, so 20% up from the lows. Whether it can sustain it or not will, you know, probably be decided this week with whatever the Fed decides to do. Moving on to Nasdaq, that remains in that uptrend. You know, there's all this excitement around AI still, and you know, it's probably a question of whether it's going to break out on the 30-minute or not, but we'll see that in a second. So in this case, I've got resistance at 14,845. I've got support at 14,255 and also 14,215. So this is what I mean by a breakout. You know, whichever way it opens on Sunday evening is you know, it's going to be a breakout one way or the other. I've got resistance at 14,793 and 14,748 with support at 14,739 and 14,658. On the Russell, on the daily, I've got resistance at 1899 and 1898. Now that top line up there, the 2033, the reason I put that on because that was the August high from last year, and it's just got nowhere near that so far. And you know, this is really because, for one, you know, it's a tech rally that we're seeing at the moment in these indices. And also, of course, the Russell 2000 is very much based around a small cap stock. So they're highly sensitive to consumer spending, consumer demand especially. Then on the 30-minute, I've got resistance at 1888 and 1887. Support at 1885. So again, we're going to see another breakout there pretty much straight away. I've deliberately sort of left the pivot points off this week just to sort of make things a little bit clearer on what's going on with the charts. I'll probably add them in again next week. Moving on to currencies, so cable, the pound against the dollar. We've got that slight uptrend coming in at the moment. I'm not sure how long that's going to survive though, depending still on what the Fed does this week. So I've got resistance at 125.93. I've got support at 124.18 and 123.17. On the 30-minute, I've got resistance at 125.85 and I've got support at 125.75. Now, if you notice on the 30-minute, it closed on a doji, you know, that indecision. So, you know, we just should expect some big swings this week with the Fed and ECB meeting. And, you know, the Dixies really struggled to break through that 104 level on the Dix, you know, the dollar index. So, as I say, you know, once the Fed make their decision and you hear sort of their press and you know what comes out with the press conference, their statement and all that, plus obviously the dot plot, which is really important for border guidance, then I think that's going to help to determine where the dollar goes next. Moving on to the euro against the dollar, got resistance at 110.80, which is way above the market, and then 107.91. I've got support at 106.78 and 105.18. And of course, you know, with the eurozone entering this technical recession, you know, the euro's struggling to gain any ground. You know, personally, I'm in the UK, I don't think that the pound merits any strength either at the moment. The economy is not so great here. So when we look at the 30-minute for the euro against the dollar, I've got resistance at 107.57 and support at 107.48. But again, it's going to come into a breakout quite soon. Moving on to Bitcoin. So resistance 28.661, support 25.099. You know, it's consolidating. You know, it's finding it difficult to rally with exchange being sued by the SEC at the moment. In the 30-minute, again, you can just see it struggling for the moment. Resistance 26.563 with support at 26.405. Now, you know, I do like to keep this one in. There was a time when they got very close to each other that, you know, they were sort of correlated. I think much less at the moment. If anything, they continue to diverge. And I think part of that's around this enthusiasm around AI pushing tech firms and NASDAQ higher. And as I mentioned about, you know, sort of the SEC action seen as negative for crypto. Moving on to gold, I've got resistance at 2000, I've got support at 1954, 1908, which is a breakout level. And of course, you know, central banks, when they're doing QE and QT, it does always make gold more challenging to trade, just because it doesn't have those perfect, well, I wouldn't say perfect, well, I just did, but what I meant was that sort of close correlation, especially with the equity markets. And looking at the 30-minute, resistance 1981, 1976, support 1974, 1968. So again, we're going to see a breakout of that come pretty quickly. Last but not least, we're moving on to oil. Resistance 74.17, support 69.01, and of course, you know, OPEC plus, even removing 2 million barrels a day through these two surprise oil cuts that they've done, just cannot turn oil bullish. And I think the majority of that is because the recession risks just threaten demand too much. Looking at the 30-minute, I've got resistance at 71.66, 71.41, with support at $70.10 and 69.01, which is the same as the long term. Again, just finally, a little reminder of what we do. So apart from the YouTubes, daily newsletters that go straight to your inbox each morning to provide you with global headlines, global news, and also my views. And then if you'd like to subscribe, we also provide chart levels and pivot points. When it comes to courses, we offer everything from one-day workshops, 1 week courses. One of those includes a free trading challenge, up to the comprehensive masterclass, which is an accredited course, and the next one of that starts in a week's time on the 19th of June. So if you're interested, then contact us quickly, because those places won't be around for long. Now, also trader mentoring, where we help traders improve and get to that next level time and again. We consult to companies, FX and commodity exposure. We provide a whole platform and mass of educational content to individuals, exchanges and brokers. And